Hi, I would like to talk about a definition of short document. A short document, often called in business paper, is the document produced with each business event, and it is to record every transaction. In other words, it's a physical or electronic documents that list the detail of transactions, and it used by the accounting department to journalize accounting informations.
Some common examples of source document include sale receipt, check, purchase order, bank statement, invoice, and payroll report. These are the original document that were created from the transaction and the first component in accounting system. The books of prime entry, we have general journal. The function of general journal is to record all the following that do not belong in any special journals, such as sale, purchases, cash receipt, and cash payment journal.
Item that have to be recorded in general journal is sale purchase of non-current asset on credit, correction of errands, company entry and transaction and transfer.
Also, withdraw of inventory for owner, own use, and also adjustment. Next, in the books of prime entry, we have purchases journal. The purchases journal is to record all the good purchases on credit and invoice received from the supplier. The information that have to be recorded in purchases journal is date, particular, invoice number, folio, and amount.
Okay, in accounting, sales refers to the revenues earned when a company sells its goods, products, merchandise, and others. If a company sells one of its non-current assets that was used in its business, the amount received is not recorded in its sales account. The amount recorded of the time of the sales transaction is also known as gross sales, since there may be net subtractions for sales returns, sales allowance, and early payment discount. Gross sales minus this subtraction result in the amount of net sales. Under the accrual basis or accrual method of accounting, goods sold on credit are reported as sales revenues when the goods have been transferred to the buyer. Usually, this occurs before the seller receives payment from the buyer. The sales on credit are recorded with a debit accounts receivable and a credit to sales.
Return award refer to the good return by an organization to its supplier. The function of return award is to record transaction involving good return to supplier. The source document is a credit note sent by the supplier.
Assalamualaikum to my madam and my friends. My name is Nur Shafira from BN11A. Okay, today I would like to talk about return inward. Return inward refer to the goods returned to an organization by its customer. They are goods which were sold by usually because of being unsatisfactory. Being unsatisfactory were returned back by the customer. They are called the sale return. Each supplier or by a customer to a business. In one case, it is a sale return, and on the other is a purchase return. So, the transaction in both case is reverse, and the concerned sale or purchase could not happen. Sale return reduce total sale of a company, and the decade of show in the trading account. Subsidiary book called sale return book is made to record all such entries. So, in journal entry for return inward account to debit, to customer account is credit. That's all. Thank you.
Cash receipt. Cash receipt. This journal is used to record all cash coming into the business. The receipt of cash usually divided into receipt of cash from cash sales, second receipt of cash from credit customer, and receipt of cash from other sources. The cash payment journal. The cash payment journal, also known as cash disbursement journal. This journal used to record any transaction that includes a credit to cash. Usual example of cash payment journal is payment of cash for cash purchases. Example of payment journal is payment of cash for cash purchases. Second, payment of cash for previous credit purchases or payment to account payable or creditors. Third, payment for various expense like rent, advertisement, wages and salaries and others. 5. Cash. Payment of cash refund for goods returned by customers. Lastly, payment of cash for donation, charities and zakat. That's all from me.
A purchase ledger is a record of a company's purchases of goods and services showing the amounts that have been paid and remain to be paid.
On a balance sheet, the total unpaid bill will usually be called trade creditors or account payable. The purchase ledger has an account for every supplier, such as supplier account carries all the transactions for the one supplier, such as purchase invoice, purchase credit notes, and payment made.
The sale ledger is your record of sale and whether or not you have received money and how much you are still owed. On the balance sheet, the total amount still owed to you by customer. We usually be calling trade debtor or account receivable.
Function of sale is used by company accountant to track revenue earned but not yet collected. It is a balance of money owed to the business by buyers who make purchases on account and agree to pay later.
General ledger. A ledger for all others account other than accounts receivable and accounts payable personal account. Total credit purchase from the purchase journal. Total credit sales from the sales journal. Total returns outward from the returns outward journal. Total return inward from the returns inward journal. Total payment made from the cash payment journal. Total payment received from the cash receipt journal.